$130 million for a digital bank that hasn't even launched yet.
Defensive M&A, Nate. Buy them before they steal your margins.
Oh, come on, that's lighting money on fire, but I guess buyers have cash to burn thanks to that Supreme Court tariff ruling.
$166 billion in unexpected federal refunds makes a fantastic slush fund.
Exactly. Look at Apollo dropping $3.7 billion on Japanese glass today.
Nippon Sheet Glass. And if you check the footnotes, they aren't buying Windows. They're buying a backdoor into the renewable energy supply chain. The rundown.
I'm telling you, half the pitch decks crossing my desk right now are basically just shopping lists funded by the Supreme Court.
You mean the February tariff ruling?
Exactly. $166 billion in federal refunds suddenly hitting corporate balance sheets. It's an absolute slush fund for strategic buyers.
I read one analyst note calling it a blistering new phase of activity, which usually just means bankers are getting their swagger back. But the liquidity is real. Just look at what's happening in Tel Aviv. Isracard is buying Bank for $130 million.
Oh, I saw this. The Digital Challenger Bank.
Right, but Nate, they haven't even officially launched their platform yet. $130 million for a startup that is technically still in the oven.
That's just smart defense. Isracard sees a credible threat to their credit card dominance and neutralizes it before it can take a single point of market share. It's a classic chess move.
Oh, come on. Paying 9 figures for zero proven revenue isn't smart defense. It's a hallucination. Show me the actual user acquisition metrics first. You can't value a bank on pure vibes.
You just hate paying for a good story.
I hate paying for vaporware. Give me a deal with actual boring cash flow, like Cencora buying the retina business from EyeSouth Partners.
Olympus Partners cashing out for a cool $1.1 billion.
Exactly. Real clinics, real patients, real billing codes.
Healthcare is definitely moving. Gilead Sciences just inked a buyout for Ouro Medicines to grab their T-cell engager program. Autoimmune is the new oncology. I swear.
We're also seeing massive consolidation up north. Desjardins Group just officially closed their acquisition of Guardian Capital Group, 1.67 billion Canadian,
which creates a $280 billion asset management monster. The scale of these roll-ups is insane right now. Private equity confidence is hitting a 6-year peak. There's this historic flood of dry powder finally getting deployed.
Which brings us to the elephant in the room. Outbound US M&A just spiked 155% to over $65 billion, and Apollo is leading the charge right into Tokyo.
$3.7 billion for a Japanese glass company.
But not just any glass company. I was digging through the Nippon Sheet Glass filings this morning, and Apollo is actually structuring a massive backdoor play on renewable energy. The big one, $3.7 billion for a glass company. I read the Apollo press release 3 times just to make sure I wasn't missing a decimal.
You're completely ignoring the romance of industrial manufacturing, Maya. This is Apollo making its biggest private equity play ever in Japan. Taking out Nippon Sheet Glass is a classic yield play.
It's a solar panel and windshield play. They explicitly called out the renewable energy and automotive sectors in the filings. They want the green infrastructure. But what fascinates me is the geography. US outbound M&A just spiked 155%. We're looking at over $65 billion crossing borders in a matter of months.
Because domestic multiples are a joke. Voices. So, I'm reading this note from a major desk this morning, calling this a blistering new phase of activity. They're saying a historic flood of dry powder and a stabilizing macro environment have pushed private equity confidence to a 6-year peak.
6-year peak? Oh, come on. It's not confidence. It's a $166 billion slush fund.
You mean the Supreme Court tariff refund?
Exactly. February's ruling just injected $166 billion in federal refunds directly into US corporate balance sheets. That isn't a stabilizing macro environment. That's finding a winning lottery ticket in your winter coat and going on an absolute shopping spree.
I think you're discounting the psychology here, Maya. Yes, the liquidity catalyst is massive, but buyers still have to actually want to pull the trigger. Bankers are finally getting their pitch decks approved. You don't just buy a company because you found extra cash in the corporate couch cushions.
Really? Have you seen what Isracard just did in Tel Aviv?
Oh, the Bank deal.
They just paid $130 million for a digital challenger bank that hasn't even officially launched its platform yet. Zero customers, zero revenue, just vibes and a banking license. You're telling me that's calculated macroeconomic confidence?
Okay, paying 9 figures for a pre-launch startup is peak 2021 behavior. I'll give you that. It's completely wild. But you can't deny the broader strategy we're seeing, especially with all this cash burning a hole in their pockets. They're looking overseas.
Right. Outbound US deal volume just spiked 155%. We're crossing 65 billion.
Which perfectly explains why Apollo is suddenly writing massive checks in Tokyo. Have you dug into the Nippon Sheet Glass footnotes yet?
Oh, I have. And the structure of this $3.7 billion buyout is fascinating. Spill the tea.
I'm telling you, half the bankers in New York are salivating right now. $166 billion just dropped from the sky.
Okay, it didn't drop from the sky. It's a federal tariff refund from the Supreme Court ruling.
Same thing. It's a massive slush fund. I had a guy text me yesterday calling it the greatest liquidity catalyst of our generation. People are acting like they just found a winning lottery ticket in the corporate couch cushions.
And you actually believe they're going to spend all of it on M&A? Come on, Nate. Look at the balance sheets. A huge chunk of these companies will quietly use that cash to pay down high-interest debt or just fund stock buybacks. They aren't all going on a shopping spree.
I totally disagree. Private equity confidence is at a 6-year peak. The macroeconomic clouds are parting. When CEOs have unexpected cash burning a hole in their pockets, they buy things. Just look at the gossip out of Tel Aviv right now.
Oh, the Isracard deal.
Exactly. The Israeli credit card giant just scooped up Bank for $130 million.
Which is wild because Bank hasn't even officially launched its platform yet. They bought a bank with no actual banking happening.
Defensive M&A at its finest. You buy the digital challenger while there's still just a pitch deck and a dream. $130 million is a cheap insurance policy to stop them from eating your lunch.
I looked at what they actually built so far. It's basically regulatory licenses and some beta code. They paid $130 million for a very expensive waitlist.
Hey, tech is where the money is flowing. Speaking of expensive code, over $170 billion just poured into the software sector to chase AI unicorns. We really need to look at who is getting swallowed up next. Tomorrow's radar. I'm telling you, tomorrow the whole market is hunting for where that $166 billion tariff refund lands. It's an unexpected corporate slush fund.
You think they'll just blow it on acquisitions? That's a massive leap. Most of that cash goes straight to stock buybacks.
Have you met a CEO with sudden liquidity? The money burns a hole in their pocket. Look at software. $170 billion in deal value lately just from chasing AI.
Speaking of burning money, watch Tel Aviv tomorrow. Isracard is scooping up Bank for $130 million.
The digital challenger?
Yes, but here is the punchline. They haven't even launched their platform yet.
Wait, really? $130 million for vaporware?
Or brilliant IP, depending on whose pitch deck you read. I'll stick to watching D-Bag Fund 8 close the hip technology deal out of Zurich. Companies with actual revenue.
Revenue? What a novel concept. We'll be back tomorrow with the receipts.